Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat.
Paris milling wheat. In late May, prices moved down away from arguably the most difficult overhead congestion on my daily chart, between 267 to 270, where the market was capped and turned into a V-top. Now prices headed lower within a June-based, quite acute bear channel, exiting out at the gold long moving average, which is currently at 224, with nearby influence from the significant supports at 227, they're now flatlining to dipping mauve medium moving average, currently 233. The bright red neckline extension of the June to November 2023 head and shoulders top, currently at 237, and under the overhead congestion between 238 to 242, containing the March 2013 high at 240. Of all of these, the two most important were and are the bright red neckline extension overhead and the gold highlighted long moving average below. The market had in recent weeks hesitated, dipping, then pulling back up, forming a dark blue late June, early September bear channel, verging on being a descending expanding wedge pattern. For this reason, I said here 12 weeks ago, and I quote, V-tops such as this one here sometimes form a handle or sideways action. Now the pressure on any V-top with an extension would be for lower prices, and so we saw an attempt lower in late August, eventually making a separate small V-bottom over late August, which was, interestingly, cut off as an island bottom with two changeover gaps, highlighted on my daily chart, one in early August and one in early September. The gapping move higher in early September overcame the 50% absolute Fibonacci line at 219, the dark blue upper trend line of the descending wedge pattern, as well as the flatlining green short medium moving average, currently at 223, and the long moving average. The 50% absolute Fibonacci line and all these other moving averages are now supports. We then had a fairly free area until we've come up 2 weeks ago to two principal resistances. And that's the flatlining mauve moving average overhead and the bright red neckline extension. These stand in the way of a number of potential pattern targets. They are target X at 238, the primary target for the descending wedge pattern, target X1 at 237, the primary target for the island bottom, and target X2 at 241, the combined secondary target for the descending wedge pattern and the island bottom. The only issue is that they mostly are within a 238 to 242 congestion band, containing the March 2013 high at 240. However, should prices overcome these, then we not only will fill in a small gap left over from the changeover from mid-June between 242 and a quarter to 242 and 3/4, but we may also have a fairly free area overhead up to another congestion band between 252 to 255, possibly extending down to 250. 3 weeks ago I was, as I said at the time, and I quote, right now I am still not convinced of the strength and validity of this recent rise. I'll be watching closely to see if what I suspect may be true. End of quote. Then 2 weeks ago I was, as I said, and I quote, I am more sure of the attempt higher than I was last week, but it all depends on what prices do with that mauve medium moving average and the bright red neckline extension. End of quote. And this leads us to today. Today I am no clearer on the move higher, but even though I still favour it, as it just seems a lot of work is needed if prices are really to try up there. And in the meantime, I'm slightly worried about the possibility of a horn top possibly forming over September. Minneapolis wheat. Back in late February 2023 and especially at the start of April last year, so that is now outside the parameters of my daily chart, the market constructed a large bear channel that moved into what is now on my daily chart, a descending expanding wedge pattern, currently 669 to down well off the bottom of my daily chart. The upper trend line is currently escorted and reinforced, and it has been for quite some time, though not very well I have to say, by the declining long moving average currently at 664. I've kept this breached, large, original descending wedge pattern still on my daily chart, as the others that were here originate from August, September and October 2023 through to April 2024 have all been thoroughly broken, and this largest one is still there, even if it was previously breached as a just-in-case situation. Going back to the market action, prices turned lower for VTOP at the end of May, heading down in a very narrow and acute bear channel. The market exited out of this pattern at the start of July, held up by a combination of the October 2018 high at 611 and the April 2021 low at 606, and most importantly, on approach to the green highlighted September 2019 to date uptrend, currently at 595, which held things up despite what turned out to be a breach in the middle to late August. During the course of its time being held up, the market created what initially looked like, and still does, a more or less blue sideways expanding wedge pattern, currently 572 to 677. However, within this expanding wedge pattern, the market also created a cat's ears pattern over July. The pattern was triggered 5 weeks ago, but it failed to reach down to its target below, instead turning back up short of it, back up within the dark blue expanding wedge pattern and over the breached green uptrend, and importantly, back up over the neckline for the cat's ears pattern. 3 weeks ago I said of the move back up, and I quote, "It has not been enough, not yet at least, for me to consider this to be a fresh move higher." Overhead we now have congestion from January to March 2021 between 625 to 650. Then congestion at 635. A congestion band between 650 to 656, containing the mauve medium moving average, currently at 645. Congestion between 666 to 676, containing the dark blue upper trend line of the expanding wedge pattern. The May to August 50% Fibonacci line at 669, and the long moving average, was currently at 664. All these are also within a wide congestion band pre the mid-year V-top formed between February to April between roughly 635 to the May 2021 low at 676. End of quote. I further added, and I quote, "These last 2 weeks," so that is now between 4 to 2 weeks ago, "I have seen a significant recovery, but I have my doubts about the stability and sustainability of this rise right now. I'm not writing it off, but I think it will need a lot more convincing for me to see this as a significant move higher. I'll be watching this market closely." End of quote. Nothing there has changed, and I even surprised myself by looking at Minneapolis as being the odd one out, when so many times it has been the leader. At the most, I'd say pay special attention to the declining mauve medium moving average, as it seems to be a declining cap on the market, with a very recent base around and just under the 630 level. London UK feed wheat. I'm sorry this daily chart is so colourful, messy and condensed, but there is a lot going on here in a relatively narrow range. The bullish incentive seen here in the spring was eroded through May, enough that we saw the creation of a V-top pattern, a very sharp downward slope that became, and here's the leap of faith I previously asked you to make in my commentaries here, and I do so again this week. The V-top became a V-top with a ghost extension. That was caused with the changeover in early July. The construction of the second part of the V-top was a very late May, late June, very acute and narrow bear channel. This bear channel overcame all the congestions on the way down except the one at 164.95, just above the combined lows of July 2021 and May 2023 at 164 even. This congestion caused the market to exit out of the small bear channel. We then had a changeover gap, a large one, between 170.40 to 196.45, and have since created a descending wedge pattern, currently 180.10 to 182.65, highlighted in purple on my daily chart. Mid-August prices dropped away below this pattern, but chose to not really move away from it, moving back within and without it during September. I'll deal with this shortly, but first I'd like to talk about the big, and it is a big leap of faith, is to imagine this descending wedge pattern tacked onto the end of the small bear channel, and thus we would have, as we've seen elsewhere in the other grain markets, a V-top with an extension, only here in truth it is not. Anyway, from that break lower in mid-August, potential for lower prices, possibly as far as the June low at 164.95, and prices tried but had limited success. The primary target was achieved, but not the harder to reach secondary target, though we did see for a while the market under the bright red middle time, currently at 175, of the recent late May to early July bearish shift pitchfork. However, prices recovered higher. Now, 3 weeks ago, I stated, and I quote, "Though we have bounced, it looks right now like a bounce that may not be sustained. Hence watch those supports again, closely, in case we see them tested. As below these, especially below the bright red middle time, we have the dark blue lower time, currently at 175.20, of the significant early March to late June bullish Andrews pitchfork. This last dark blue pitchfork is the only bullish pattern, bar I suppose the gold long moving average, currently at 178.25, which is flatlining anyway, left on this daily chart unless the market chooses to construct a new pattern." End of quote. Thus we now have below some immediate support from the September 2021 low at 181.70, excuse me, the 50% absolute Fibonacci line at 180.5, the combination of the March to May 50% Fibonacci line at 178.25, and the gold flatlining long moving average, currently 178.25 also. We are today trying to stabilize on what is left of the purple descending wedge pattern, as well as under the dark blue medium moving average, currently 185.15, and the green short medium moving average, currently 186.60. Unlike most of the other grains, I am not sure of this current move higher. We have relatively little in the way topside until the bright red upper time, currently at 192.80. So why aren't we trying higher? This puzzles me. Now, as I've said elsewhere, watch out for volatility around the pitchfork time crossovers. Usually, I apply this to time crossovers of the Andrews and shift pitchforks for the same move, which is an important point. However, I'm not being so strict here, so I just say caution on this, as the next crossover of sorts is on today, the 27th of September. It hasn't been happening today, but watch out for the next few days for volatility.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Toftbeck and ADM Investor Services International Limited. And here comes the final important bit.